Alright, hope everyone's doing well. A couple things to talk about really quick. Like I said, I really don't remember. I can't remember if I talked about this day, but biggest thing here, strong breakout, but bad waning follow through, bad follow through, bad signal bar. So you have to think the bears will make money. Now, the difficult thing about this is it may take 15 bars for the bears to make their money, but price will fall below this, most likely. Same thing here. Usually, notice here, the market does a lot of things in kind of waves and patterns over the course of, consecutively at times. What I mean by that is high of the day, decent stop entry, temporary high of the day, decent stop entry, temporary high of the day, decent stop entry, and as you can see, well, high of the day, decent stop entry. And by the way, I mentioned in this video, I mentioned here, I'll go ahead and set it back up for you. I thought that the measured move down was from the open to this high, and this was kind of a outlier, which led down to here. Because the reason I think that is, well, 26.75, 26.50. Sorry, 26. I'm having trouble reading. There we go, 26.25, 26.50. So price came within a tick of this measured move, which is close enough. Well, if a trader, this is a trade I think has very good math to do this. If a trader was willing to overnight, you'd have to hold overnight, or at least a little overnight. The trader was willing to buy somewhere down here as close as they could to here. So in other words, if you think it's trading range, you start to see this go sideways, you just buy at the market. Maybe buy on a limit somewhere down here. Put your stop down here, and if you can, you don't have to, buy more here. So in other words, if you want the highest probability, you buy somewhere down here. Let's say you're trading 2 contracts. Buy one here, buy a second down here, stop down here. Target the open of the day. So in other words, you're potentially, you stand to make like 20 points. So, and traders are doing this. If you think about it, I don't want to get too involved as to why that happens. It's just because measured moves lead to, spikes lead to measured moves. And in order for, the real reason these things happen, this kind of measured move, is in order for the open of the day to be in the middle of the day and create a perfect doji, you have to have an attempt up and an attempt down, and usually meet in the middle. So, and as you can see, you would actually never been stopped out. I'll double check real quick. Well, this is actually on the Z contract, so it was rollover. Here we go. Yeah, as you can see, you would have been long somewhere in here, stop down here, and price drifted up to here. So look here. Here's the open of the day, this red line. Notice what happened here. Why do you think, do you really think it's all that much of a coincidence that we hit here and then just touched it here? Think about it. Some traders will hold hoping for a retest up. They're significantly disappointed here. By the way, the open was 54.50. price went to 55 even. Many other reasons as to why. Here, price touched 54.50. Well, there's a trade example, and traders do this on all time frames all the time. So just kind of a fun tidbit for you real quick. I don't want to get too distracted. There we go. Okay, so sorry about that. By the way, another thing to kind of measure for trading ranges is to do this. So here, this kind of, so we have a bull spike, and as you can see, here's the bottom third, or the lower portion of the trading range. So in other words, you have the bottom third, upper third, middle. Point being, it's a lot of times price will come exactly to the bottom third and then turn up. And if it goes down to the bottom third, it's a pretty good sign that you're in a trading range. So you have to be aware, if we test up to here, these bulls are going to be significantly disappointed. And you know, if you really think about it, I'm trying to remember. Oh yeah, this day, which I'll just show it on the back to the day session. Look right here what happened. Well, we rallied strong up here and had this deep sell-off. So we rallied strong, deep sell-off, and rallied up, deep sell-off back to the bottom. Tried to create a double bottom and failed. Anyways, notice, let's go back to these 2 days. You had bad stop entry, bad stop and entry for the high, for the low of the day. Well, usually when you have bad stop entry, there's sellers above. And although a lot of sellers would exit up here, some will not. Some, you know, think of this trade. Here's a short. What are the odds that we get back to this high or the open of the day if I sell here, stop up here? Well, maybe 40%, 30%. Do the math. If I risk to the top of here, set a target down here, even if it's 30%, that's a really good math, especially if I'm willing to take half off and hold for the measured move down, even better. So there are sellers who will hold, sell more below here, and exit their full profits down here. They'll sell this high, and as they did, they sold up here and exit. So if you're trading always in and you're long up here, you have to remember it's a bull channel, which is a flag, fair flag. You got to get out below here because it's a credible short. And you know, here, not a great signal bar. Trying to break out above channel, expanding triangle. Here, here. It's probably going to fail, and we'll probably at a minimum test the bottom of the channel as we did. So, and also just to note, this is what's interesting because it seems so small, but it's a very, if I can, sorry about that. Okay, zoom in a little bit. So at this point, we're clearly going higher. We may test, you know, we tested up to here. Look at this bar. This high is 58 even, and this measured move is 58.25. Oh, well, sorry. 1 second. Okay. I forgot I was trading the Z contract and not trading the March contract. So anyways, here we go. This measured move is 67. This high is 66.25. Think about that. Prices, you have a strong breakout, probably you'll get a second leg up. Price is forcing you to take a stop entry with a tail that is 2 to 3 ticks away from a very logical measured move target. Well, that could be a good sign that we may go, also at that target as well, that we may go, you know, maybe a point above here and turn down. So if you take the short, I'd put a stop at a minimum 1 tick above here, maybe 2, because this might happen. And then, you know, or you can short below, put a stop above 1 tick, and short again, you know, double your position. But that's hard for some people to be willing to do, because you have to be willing to take the next one. So probably better just to wait for the next one. And we sold back into here. So just remember that generally when you get a breakout at the end of the day, when you're not getting good follow through, it's breaking out of a channel, it's probably going to fail. Also, why do you notice how we're getting bear stop entries for the high of the day that are pretty good signals? Temporary high of the day, high of the day, high of the day. That is because of the 60-minute chart. I pointed out a while back, I said we may be channeling down, and I said it, I don't remember where, I think up here. Big down, we got a bear breakout, a pullback. Well, by the way, what's the odds that this is a 67% pullback or a 50% pullback? Let's just find out. Well, kind of in the middle. Oh well. We have a bear breakout, lower high, bear breakout, lower high. We had a high here, but we did not make a new low. Bear breakout, lower high. So if we continue to go down, well, then it could be a bear trend. Second off, we have 3 pushes down, 1, 2, 3. So we could get that. Take us all the way down to somewhere down to here. Probably not likely. So just be aware of what's going on. Weekly chart today was a, you know, look at this. Closed strongly below, but sideways. And I think the fight is, you know, ultimately down, the test down here. We got down here. The ultimate test is down here. So, fun to think about. In terms of today, first off with always in. I don't know if I stated, yeah, always in. If you buy, you have to get out below. I think bears short below here. Bulls get out above, potential double bottom. If not, they get out above here. Have to get out above here. Probably bulls get long here. Excuse me, bears get out here and here. Bulls need to get long probably here. I think bulls get out here. There's too much risk of, we're in a bear channel, so we're at the moving average, too much risk of sellers. If you don't get out here, I think you have to get out on this close or on its low or above this bar, somewhere in here. Bears go short from we're down. It's also a possible exhaustion, so we may get the test down. We'll probably fall below this low and may even test here. So 47.75, 48.25. That's interesting. Break even bulls would not have been stopped out. Their entry would have been 48 even. I think bulls, bears get out above this bar for sure. It's a micro double bottom. It's a wedge, so it's a second entry short. Betting on the wedge bottom, pullback. And we stayed above this higher low, and we're making the higher low, so bulls are long, and I think they stay long through here. I think they get out here. And, you know, of course, better for them to get out here, but either way, They have to get out below here. I think bears go short, or they sell this close, sell above the bar, and do they get out above here? I think they can. We're at the bottom, we're at the start of the channel. Spike pullback channel. Getting late in the day, you have a pretty decent profit if you held. Otherwise, you just hold till the close. No reason to buy. Today, spike down. So we may have tested the moving average. We're far away from it. No good stop entries. Do you sell this? Well, arguably it's a breakout and follow through, but you have to remember we're very far from the moving average, and that's hard for a lot of bears won't sell down here. They're going to have to wait for some sort of pullback, sell climax. So when they go sideways for a little bit, probably better to wait for a stop entry. So I think bulls, if bears are short, I think they have to get out here and do bulls buy here. I mean, they can. I think they do, but you got to be careful. It's a trading range, so I'd personally wait for the stop entry or clear breakout with follow through to the upside. Bulls, I think, have to get out below here. It's a wedge. I can see them getting out here. It's a second entry. That's actually interesting. So I believe okay, so I meant to mention, I want to look at this chart. See, this is oh, okay. Well, anyways, so back to what I was saying, we have a low 1, low 2. I can see bears getting out, bulls getting out at the top of the range. I think bulls for sure get out here. Bears go long. Excuse me, bears go short. And where do they get out? Do they get out above here? Well, I think they can, but if they get out here, I think they have to go get back short here. Same with the bulls. If the bulls buy to go long here, they got to get out below this bar. Do bulls buy here? You have a double bottom and a double bottom here. Not a great signal bar. I think it's still always in short, and we may be making a consecutive lower highs and lower lows. If bulls buy, I think they have to get out below here, and bears will short. They'll short below. So we got a bear breakout. We touched the November low, but as you can see, bear breakout, bad follow through, bear breakout, bad follow through, starting to go sideways. At some point, you have to remember a pullback is simply a trading range. At some point, let me start over. A trading range is a pullback that has gone on for so long that you're uncertain of the probable outcome. Well, at some point, you got to be uncertain that we're going to get more down from this breakout. 2 legs down. Have a leg 1 trading range in the middle. So sometimes the middle of the range will project to a second leg down based upon from here to here. We achieve that. We tried to achieve a measured move. The double top didn't reach it. So you have to ask yourself, do you think the bulls are going to make money that bought below here? Probably. So yeah, I think bears get out somewhere up here. The bulls will buy, and where do bears short? Well, it's arguably a channel. So a logical place is some sort of pullback. And by the way, here is exactly this 67% pullback, which is interesting because that's basically twice the risk of if I sell here and stop up here, it gives me 2 times risk reward. Down here, it's also so I can get this right. So if I was to buy here, buy more, let's say somewhere around here, it allowed traders to exit. So traders buy here, they scale in, buy more lower, take a place, and here's their average entry. You can see there was selling right there. So, and then here we came back to the stop entry. So what that means is traders will buy, they'll add on, they might take all off, or they just hold and get out of everything, break even on the first, profit on the second. Some traders know, smart traders who are aware, they'll just buy and scalp out up here or down here. So, and also this is a minor lower high, not significant, because we didn't make a new low. We have a lower high, a pullback, and a higher low, so we may get a two-legged pullback. And also, whoops, gotta mess that up. Here we go. Basically leg one, leg two. Bulls probably needed one more bar, which would aim to break out above here to make it always in long. They didn't get it, so it's also a test of the 15-minute moving average. Right here, it's a large two-legged pullback. So for always in, as I said, bears are short. They maybe get out here, short again, maybe get out here, short again, but I really think they hold. But I can see the logic getting out, betting on trading range. They have to get back short, they're hold, they get out. Maybe bulls go long, but if they do, I think they get out below this bar. You know, and then maybe they re-enter here. Since it's a possible trading range day, which it looks like it is at this moment, you have to think about the open of the day, which is here, so we may test up to it. Bulls needed one more bar and failed. I think bears, what did bears do? I think bulls get out somewhere, bears enter somewhere, and you have to notice it's always in long. We're not getting good stop entries. Broke above here, we may have to get a more credible double bottom with here, and then we went sideways. So one thing to note, we had 3 pushes down. You know, very often, I don't really show it. That's not going to show it either. It's kind of interesting. Here's the inverse, and it just drifted up, kind of a different story. So kind of trend from the open if you think about it. Okay, so back to what I was talking about. This is a bear channel. Doesn't look like it, but it is. So, oh yeah, bear breakout, bad follow through, bear breakout, okay follow through, but that doji is a problem. Again, doji is not big bars, so it's probably going to fail. You know, we may have to touch down to here, but once you get this bar, bears give up.